Good morning out there, people. How are we doing today? Well, good morning out there. How we doing? How are we doing, people? A crazy 24 hours it's been, to say the least. But what is going on, people? How are you doing out there? Where are my friends? Where are you? Good morning. Only got 14 people in here right now. We'll wait a little bit. Good. Tired. More tired than normal. I think I would agree with that assessment as well. What's up, Caitlin? What's going on? How we doing? What is going on, people? How are we doing? All right, people. As a social studies teacher, I do feel a little bit of an obligation to kind of talk about the events yesterday. Crazy phenomenon today. All kids are tired. You guys are always tired. But I do want to talk a little bit about yesterday. And I typically keep politics out of the classroom, and I'll do that a little bit today. But I just kind of want to share my my feelings on it, and what I want you guys to do is here's your attendance in the chat, because I can't really think of like a fun like attendance in the chat that's just, you know, like a day like today. So your attendance in the chat today is using the emojis, right? Give me your emotion this morning, right? Here's my emotions this morning and whatnot. So, but what I just wanted to say is, you know, obviously what happened yesterday is very saddening. It's very sad. It's, you know, it's troubling, and I really hope that's not going to be the norm in American politics going forward, right? I don't think violence should ever be condoned. I think it should be condemned at all times. It's kind of just like a sad day. Kind of just like a really sad day. I don't know if you guys know or care or anything, but I don't know. That's kind of where I'm at, and you know, and I just want you guys to know if you're feeling the same way. Yeah, if you're feeling the same way, and you know you're feeling alone about it, right? You know, you can talk to me about it in Google Meet, right? If you want. But that's kind of where I'm at. That's kind of where I'm at with it. So, yeah. So we got some sleepy in bed with the laptop. I like that. You guys are pretty clever with this. So you guys cheer me up. Some of these I don't really know. Nice. Gotcha. I am good, people. I'm good. I don't know how to explain it. Like, just people, are you aware of what happened yesterday? I think it's pretty sad. It's a low point in American history, and I haven't been alive that long. I'm kind of getting a little old, but the only thing I can really compare it to, people, is when I was how old was I? I think I was in 4th grade when 9/11 happened. That was the closest it ever was that feeling was 9/11 when I was in 4th grade. So that's where I'm at, people. I don't want to be depressing and sad, but I just want you to know that if you're feeling the same way, you know, it's totally normal, and you should be, in all honesty. But you guys are all tired. Yeah, alrighty, but if you guys want to talk about it, we'll talk about it on Google Meet. And if you don't want to talk about it in front of the whole class, I'll stay after and talk to you about it if you want. But we are going to move forward with the content, right? Because tomorrow should be a pretty fun day, right? Tomorrow you guys are going to start your only project for this rotation, and then I say project, people, it's like a 2-day thing, right? It's not like you're making this huge, thing, but It's going to be more so like, student work, right, rather than like I lecture and you fill out a note guide. That's what we're going to do tomorrow. We're going to start off on YouTube tomorrow, just for like about 10 minutes. I'm just going to kind of go over the project and all that, and then you guys will work on it tomorrow. But what you guys are going to eventually do, and I don't know exactly how I want to do it because, again, I'm doing something I did in the classroom and making it virtual instead, so it's kind of complexities with that. But basically, you're going to be given like a different person. Like you are going to be a different person. Some of you guys are going to be a senior citizen. Some of you guys are going to be, you're going to have this much income. You're going to have this much kids. You're going to live in this kind of residency, right? You're just going to take on a different person, right? And then you're going to have to go to a town hall meeting and be in support for one of the 4 tax proposals based on, your interest, right? That's kind of what we're going to be doing tomorrow. So today we're learning about taxes. We're going to learn about different tax structures and types of taxes. And then, like I said, on Friday and Monday, you guys are going to kind of, simulate a real life town hall meeting. Like you'd go there and be like, hey, I don't want this tax. If we have to do a tax, I want this tax, and here's why, right? So I think it's very relative in your life, right? Like ultimately, you guys will probably be active in some way, right? And you have to be aware of, if this tax passed, is that gonna help or hurt you, right? So that's kind of where we're going. But we're learning all about taxes today, which I think is pretty exciting. Aside from that, I don't know if I have really any other announcements. Just your daily reminder, right? Make sure you turn those EDPs in and you turn those junior interviews in, right? Make sure you do that before the end of the semester. And I told you guys, I really, the sooner the better, right? If you wait till the last day and then something comes up, right? It's kind of outside of my hands. Remember, this is also an assignment, right? Your EDP will be an assignment, and your junior interviews will also be an assignment in the class. All right, so just make sure you tackle those 2 agenda items whenever you get some spare time. All right, people. Let's get into it. Let's get into it, people. Oops. All right, taxes. Look all tired. What does the upside down smiley face represent? You guys are silly. If I put my cursor over it, does it say? No, it does not. No. All right, people. Let's talk about taxes. Right? Let's talk about taxes, and I promise I won't go as long as I did yesterday. I didn't mean to go that long yesterday. So, yeah. All right. So, what are taxes? You guys know what a tax is, right? A tax is a mandatory payment to the government, right? A tax is mandatory payment. If you do not pay taxes, you don't go to prison straight away, right? You go into you pay back taxes, and if you don't pay back taxes, then ultimately you will serve some time, right? It's mandatory by law. You have to pay taxes, and do not try to avoid them if you are forced to pay them. So again, mandatory payment made to the government to cover the cost of governing, right? So why do we pay taxes, right? What's the whole purpose of tax, right? Obviously, most of us don't want to pay taxes, right? Because at the end of the day, it's money that's coming out of your pocket, right? It's less money, less disposable income, less money you're going to have to buy, goods and services that you enjoy, right? So, let me be clear, right? No one likes paying taxes, but we have to, right? And I would argue that paying taxes is one of the most patriotic things you can do as an American, right? Because what you're doing is you're financing government operations. You're paying for public goods that everyone is going to enjoy. You're promoting the general welfare of all of U.S. citizens, right? If you're very against taxes, right, just view it differently, right? Change your perspective on it. It's a charitable contribution, in other words, right, for your fellow countrymen and countrywomen, right? All right, so what is the first purpose? Like I said, finance government operations. There's something called a public good, right? A public good is a good that is a market failure. In other words, it is a good that if left alone, if there was no government, that good would not be brought to market by the free market. The free market would fail to bring that good to market because, by definition, I think we already talked about this already, it's non-rivalrous and non-excludable. In other words, highways and national defense and schools and things of that nature, generally it's tough to avoid the free rider problem, right? So it's just not profitable generally, or it shouldn't be profitable, because if it's profitable, they won't bring about the allocatively efficient level of output or price to the market. So it's best for the government to produce these goods. And those goods are called public goods, right? So what's the best way for these goods to be brought about, right? Just make everyone pay, and then everyone gets it, right? Everyone benefits from it. That way, no one gets these and benefits from these goods without paying, right? Free riders. So that's the idea, right? Generally, right? Countries with higher taxes generally have, better public goods, right? Better roads and national defense and schools and the sorts, right? So again, no one likes paying taxes, but remember, you are getting something for that, right? You are getting something for that, and where I live, I would be willing to pay much more in taxes. I can tell you that right now. And obviously, as a teacher, I don't make bank at all. But like where I live, the street is terrible. All the roads are terrible. I like to go running from time to time or walk. Hans, my dog, and there's potholes everywhere. There's not even sidewalks in a lot of like the main downtown portions of Fenton. The street lights oftentimes don't work, and the street light outside of my house flashes. Right, I am willing to pay more taxes for those things to get fixed. Absolutely, but generally, here in Fenton, taxes are always voted down. Right, people, especially in my neighborhood, there's a lot of people that are elderly. Right, and you just got to remember that elderly people that are retired, right, generally live on fixed income. So they have an incentive to not be in support of taxes because obviously they're going to have less of an ability to pay those taxes. But again, remember, right, when you pay higher taxes, again, it benefits from you. Even if say those taxes go to the school, right? They go to the school. Well, if the school is better in the town or city that you reside in, right, that increases the property value of your home. Right, it all kind of comes back to you, is the whole point. And then number 2 is fund social programs, right? Welfare, Social Security, Medicare, Medicaid, things of that nature, right? And again, Mr. Moore here would definitely be willing to pay more in taxes, for more things than that is provided, right? Universal health care, things like that. I would definitely be willing to pay more in taxes. Number 2 is influence economic behavior of firms and individuals. So sometimes the government uses taxes as a way to sort of de-incentivize or punish individuals or firms. And when I mean firms, I mean a business, right? For not de-incentivizing them from producing a good or consuming a good, right? So we know that cigarettes are taxed. Right, cigarettes are taxed. Right, we tax cigarettes because we don't want cigarette companies producing cigarettes, and we want higher prices for cigarettes so less people can buy cigarettes and de-incentivize them from being able and willing to buy cigarettes. Because obviously cigarettes are harmful. It's a third-person side effect. It's a negative externality when someone smokes next to you. You stink. Right, secondhand smoking. Cigarettes are the number one most littered item in the world. But I don't know if that's factual anymore because I think masks are now. I think like disposable masks are the number one most littered item in the world. I don't know anymore, but it's obviously that government's going to use taxes to get less quantity brought to market and at higher prices. And you guys remember when we learned about supply and demand, right? If you tax the production of the good, an excise tax, that's what an excise tax is. It's going to result in less quantity and higher prices. So governments sometimes use that as a way to discourage economic behavior, and especially if it's a externality. You guys, again, remember what an externality is, right? An externality is a third-person side effect. So if we tax an externality, we can actually get less quantity to a more socially optimal quantity, and that's the idea. Wait, how does the tax work on cigarettes? The sale of the cigarettes is taxed. So if a cigarette company sells the good for $6, they have to pay the government maybe $2 on that, so they really only receive $4, right? So maybe cigarettes, if it wasn't taxed, the price would be $5, right? So consumers would buy for $5, and producers would get all $5. Now we put perhaps a tax on it, so now the price is $6, and maybe it's a $2 tax. And you guys always got to remember that when you tax a good, the change in price doesn't always equal the full amount of the tax. Generally, it's less. And it's something called elasticity. But if you tax cigarettes $2, the price will probably only go from $5 to $6. So consumers are going to be discouraged from buying cigarettes because it's a higher price. But also, producers will bring less to market because really, after they pay the $2 tax, they're only going to receive $4 from it, right? So that's kind of the idea. We pay gas taxes, to incentivize people to drive less, right? Things like that, and then we use gas tax to fund roads, is the idea. All right, so there's a little graph here on the side here. I'll go over that here in a second. But now people, I did it again. All right, hold on, people. I forgot to. Oh no, your note guide already is up. I'm gonna start doing that. I'm just gonna put it up here and just assume that if we're lecturing, you have a note guide to do. Okay. So we're right here though, right now. So you're not behind. You're not behind. All right. We're right here. I'm going to talk about these 3 tax structures first, and then what we're going to do is we're going to work through each of the 9 taxes, identify the tax structure, and all this. Right. So I'm going to give you this exact chart, and you're just going to kind of follow along. Okay. Look how fuzzy I look right now. The green screen isn't working that well. And then we're going to do this in Google Meet. Okay. We're going to do this bottom part in Google Meet. So this is just the note guide up here. All right. Again, it's right here. Okay. All right. Anyway, so now this should say the three tax structures. Okay. All right. There we go. Back on track. All right. So the 3 tax structures in terms of how are taxes structured, right? The first kind of structure of a tax could be a progressive tax. So what is a progressive tax? It's any sort of tax. So we're going to see there's many types of taxes that can be progressive in nature, but it's any sort of tax that is taxing income directly, right? And a progressive tax is those that make more income are going to pay higher tax rates, right? It's going to progressively increase the more and more income that you earn, right? Richer people pay more is the idea of a progressive tax, right? So someone that makes $1 million is going to pay a higher percent, a higher rate than someone that makes $30,000 is the idea. So what you see over here would be the idea of a progressive tax, right? Someone that makes $10,000 pays 10%. Someone that makes $50,000 pays like 20%. Someone that makes $125,000 pays 30%, right? As you make more income, your income's going to be taxed directly, right? And you're going to pay a higher percentage, a higher rate, right? So who's against progressive taxes? Wealthier people are going to be generally against progressive taxes, and lower income groups are definitely going to be more in favor of progressive taxes. Okay, so the best example of that is our current federal income tax system, but I'm going to show you guys that here in a bit. It is progressive, but it also isn't progressive, and I'll show you that here in a second. All right, I'll show you that here in a second. Yeah, we'll discuss that here in a moment, Erwin, because it actually isn't really progressive. There isn't truly that many taxes that are truly progressive. We use something called marginal tax rates to make it more, quote unquote, fair, right? But again, I would argue that a progressive tax system is the best tax structure to combat the market failure of income inequality, right? It's going to be the best tax structure that promotes a healthier middle class and more consumption spending in the macro economy, right? I would be Mr. Moore would be in favor of progressive taxes, right? For the record, but I want you to form your own opinion. All right, I want you to form your own opinion based on the information that I present you. All right, number 2 is a proportional tax, and sometimes that's called a flat tax. But formally it's called a proportional tax, and I want you guys to call it a proportional tax. And that is when everyone is taxed at the same exact rate. everyone is taxed at the same rate, right? So, regardless of your income, you're going to pay 20% of your income, right? So, again, what Erwin put in the chat is that's what I want you guys to think of. Like, which tax system is the most fair, right? This is kind of the debate right here, right? Is those that can afford it more, right, and have more of an ability to pay, right, should they pay higher rates, right? Or should everyone pay the exact same rate regardless of their income, right? Because, if 20% of 10,000 is less than 200,000, 20% of 200,000, right? So this person will pay more dollars, but again, like, who has more of an ability to pay? Someone that makes 10,000 or someone that makes 200,000, right? This 20% of 10,000 is going to be, food for someone that makes $10,000, and 20% of someone that makes $200,000. I don't know, maybe one less vacation or something like that, right? Okay. Anyway, third. Oh yeah. So what's an example is our income tax. You can put our state income tax. Michigan state income tax, I believe, is a flat tax. So our federal tax system is progressive, a little bit, not entirely. It's actually progressive and proportional, but and then our state income tax is definitely proportional, right? Everyone pays the same exact rate regardless of how much income you make. And then some states don't have income taxes. Some states are progressive. Some states are proportional, right? It all kind of varies on the state. And then last but not least is something called the regressive tax. Believe it or not, this is a tax where lower income groups are going to pay a higher percent in relation to their income. And believe it or not, most of our taxes turn out to be regressive. In other words, poorer folks, lower income groups, pay a higher percent relative to their income. So regressive tax is going to kind of work a little bit differently than these other two. This is going to be any time we tax a good, consumption of a good, or ownership of a good, right? These two are going to be taxing income directly, right? You could have a regressive tax for income tax directly, but like that doesn't happen, right? That would never happen. No one would be in support of, hey, if you make less, you got to pay a higher rate from your income directly, right? That'd be pretty insane, right? But any sort of consumption tax is going to be regressive, and let me kind of show you, because sometimes it's hard for students to understand. Where's my cool purple marker here, right? So what I mean is like this, right? So say I have someone that makes, I don't know, $20,000 a year, and then say I have someone that makes $100,000 a year, right? And both these two individuals, they go and they fill up their gas tank, right? They drive the same vehicle and they fill up their gas tank, right? So they put $40 in their vehicle, okay? Right? And let's say the gas tax is 10%, right? So they're both going to pay 10%, right? They're both going to pay 10%, right? So how much are each person going to pay, unless my math is wrong, which generally happens sometimes, right? Each individual is going to pay 4%, or not 4%, is going to pay $4 for the gas tax, right? They both fill up their tank. Filling up their tank both cost $40, right? They're both going to pay $4 in taxes, right, to do that. Now, if you take that $4 and compare it to their income, right, who is paying a higher percent in taxes relative to their income, right? Definitely poorer folks are going to pay a higher rate in relation to their income, right? So that's what I mean by regressive. Anytime we have a consumption tax like a toll road or a gas tax or sales tax, right, is going to hurt poorer income folks a little bit more than richer folks. And that's the idea of a regressive tax, okay? So yeah, that is a regressive tax. So like the more money you make, you pay a lesser rate, right? You pay a lesser rate is the idea. So sales tax, any sort of consumption tax, like when you're buying a good and that good is taxed on purchasing the good, right? That's definitely going to hurt poorer folks a little bit more. All right, so let's do a little check on learning here. So do a little check on learning now. Just because like the time lag and everything, right, I'm probably just kind of gonna do this for you. But it says, what kind of taxes are these? Think percent of income. All right. All people, that is important. That's why I underlined it. Think percent of income, all right? A toll road tax, where you're taxed $1 per day. Actually, let's put it in the chat. If you're taxed $1 per day every time you use the road, you guys ever go to like Ohio? I think Florida has some toll roads maybe, right? A toll road, right? Where you have to pay in order to get on the road, and then when you get off the road, you pay, right? Or when you get on the road, you get a little like receipt, right? And then when you exit, then you pay, is the idea. But if you pay $1 a day for using that toll road, is that regressive? Is that progressive? Or is that proportional? We'll do a couple of these in the chat. We'll do the first one in the chat at least. Is this regressive, progressive, or proportional? A $1 tax every time you use the toll road. Who's that going to hurt the most? Think percent of income. Think about the example I just gave you guys. Right? Is $1 going to be a greater percent for someone that makes like, $10,000 a year, or, compared to someone that makes like $100,000 a year? Right? It's going to be regressive. Right? A toll road's going to be regressive, right? Again, when you take that dollar and you compare it to someone that doesn't make a lot of money, to someone that does make a lot of money, this $1 as a percent of their income is going to be greater for someone that's lower income than someone that's higher income. That's regressive. Again, any consumption tax, you're consuming the road, not like eating it, but like you're buying that good or service, right? So that's regressive. Guess another one. State income tax where richer citizens pay higher percent. We know that's progressive, right? We know that number 2 is progressive. We got some regressive in the chat. Nice. So number 2 is progressive, right? The richer pay more, and their income is being taxed directly. Okay. Number 3, a 45-cent tax on cigarettes. Again, here's a little trick, right? If it doesn't give you a percent, that means it is a consumption tax, right? You're being taxed a certain dollar amount, and then again, when you take that dollar amount and you compare it to people's incomes, right? Poorer folks are going to pay higher percentage relative to their income, right? So number 3 is also a regressive tax. Okay, number 4 is a proportional tax. Number 4 is proportional tax, right? Your income is being taxed directly, and everyone's income is being taxed at the same exact percent. Okay, so everyone's paying the same percent. Here again, poorer folks pay a higher percent, poorer folks pay a higher percent, richer folks pay a higher percent, but here everyone's income is being taxed directly at the same percent. So number 4 is proportional. And then number 5, put number 5 in the chat. What do you think? A Michigan sales tax of 6%. So you buy a t-shirt in a store in Michigan and you pay 6% on purchase of that good. Is that going to be progressive, proportional, or regressive? What do you think? What do you think? What do you think? Very good, regressive. Very good, regressive. It seems like it's proportional, right? Because this one's even trickier because it gives you a percent. But again, people aren't being taxed. Their income isn't being taxed at 6%, right? It's 6% of whatever you buy. So again, going back to, I want to clarify just because like I know it's, usually students struggle with it. No, you're all good like this, right? Again, like if both individuals buy $100 worth of goods, and again, this is like a rich dude, and this is like a poorer person, right? And they both buy $100 worth of goods, right? And that is being taxed at 6%, right? Which you'd be 0.06. You'd multiply by 0.06. Each individual is going to pay $6, and then when you take that $6 and as a percent of their income, right? This person's going to pay a higher percent. $6, $20,000 of their income, $6 of that's going to be a higher percent than $6 is, to $100,000 in income. That's the idea of a regressive tax. All right. Okay. All right. Let's talk about the types of taxes. All right. So you guys have a table that looks similar to this. All right. I'm gonna run through this pretty quickly here. All right, because I want to give you guys a little bit of time to do the town hall preparation for tomorrow. All right, so the first, so these are the different ways in which things are taxed, and then we have to discover and identify, okay, what tax structure is it, right? Is it regressive, is it proportional, or is it progressive, right? Individual income taxes. Now this one varies. It depends. Now I'm talking about federal income taxes. Actually, wait, where's people? I missed this. All right, yeah, I want to talk about this real quick though. Right. So here's how our federal income tax system works. And I told you guys it was progressive, but really it's also proportional, right? Because Erwin brought up a good point. Like, is this fair, right? Is our federal income tax system fair? Well, here's how it works, and also here's a big misconception. When I first started teaching, about 7 years ago, my mother called me once, and she said, "Hey, I'm thinking about getting this new job, but I was thinking about it. If I take this new job, it's gonna bump me and my mom got remarried, so my stepdad, my mom and my stepdad would get bumped up to a new tax bracket, right? So maybe from 82,000 to here, right? So she thought if she took this additional job, instead of being in this bracket right here, well, they're married, whatever. They would go to the next bracket, right, and then pay a higher percent. So thus they would lose money. People, remember this: you can never lose money in paying taxes by working more, because they're marginal tax rates. And you guys know what marginal means, right? Marginal means additional. So here's how it works, right? Regardless if you make $100,000 a year. So someone that makes $100,000 a year, you would think, in looking at this, and people, many Americans think this, which is really, really concerning, right? But many Americans think that if you make $100,000, you, in looking at this, right, have to pay 28% of $100,000, right? So you make $100,000, you're going to have to pay $28,000 in taxes, right? That is not true at all. That is not true at all. And again, many Americans believe this, right? It's marginal. So this is what happens, right? If you make $100,000 a year, you're going to pay 10% on $8,000 of that $100,000. Okay? 33,000 minus 8,000, I don't know, whatever that is, right? That portion of your $100,000, right? You're going to pay 15% on that. The next segment or portion of your income, you're going to pay 25% on that. And then, say if you make $100,000, only $18,000 of that, you're going to pay a rate of 28%. So generally, if you make $100,000, right, you're not going to pay 28%. You're going to pay, in aggregate, you're probably going to pay around 19% in taxes is the idea. So it's a marginal tax rate. That's the idea. Welcome back, Michael. Did I make you fall asleep? I'm just kidding. Does that make sense, people? I really hope that makes sense. It's very, very important that you understand the idea of marginal tax rates. Okay. Again, a lot of people, the big debate usually, like in presidential elections, is this top marginal tax rate. This top marginal tax rate of 35%. Again, if you make $400,000, you're not paying 35% in taxes. Definitely not, right? You're paying the same amount as everyone else is for that amount of income, right? Someone that makes $8,000 a year, and maybe that's you guys, right? Some of you guys that are working probably make around that, right? So you're going to pay about 10%. Someone that makes $400,000 is going to pay the same rate you do for that portion of their income, right? So it is proportional, but yet it's also a little bit progressive, okay? And then the last thing I want to mention is that these marginal tax rates have been decreasing ever since the 1950s. In fact, and I would argue America was at its high point in terms of productivity and wages in the 1950s. These marginal tax rates were actually around 80%. 80%. Right? And now we have debates about 40%. We call that socialism. Right? I'll leave you with that. Okay, anyway. All right, so let's get back to this. All right, so individual income taxes, we're just going to talk about federal income taxes, right? So that tax structure obviously is progressive. Generally, it's progressive, okay? And then who pays for it? Who pays the tax? That's also known as tax incidence. Tax incidence is who pays the burden. Who pays for it, okay? Who pays individual income taxes? Those that work, right? If you don't work, you're not going to pay individual income taxes because you're not making income, right? So it has to be workers, right? And then who gets it? Who gets the federal income individual taxes, right? Income taxes, the federal government, right? And if we're talking about individual income taxes in terms of the state or local, right? Usually there's no local income tax. It would obviously go to the state, right? So like when you guys do your taxes, you're gonna file your state taxes, and you're also gonna file your federal taxes, right? And sometimes when I do my taxes, sometimes I gotta pay the state, and I get money back from the federal government, and then sometimes reverse. It kind of sometimes depends. Anyway, and then what is some extra info, people? Believe it or not, this is going to be on the final exam right here. I just this last column here is just like extra information that you need to know about each of these types of taxes. Individual income taxes is the largest source of income revenue for the federal government. This is mostly how the federal government finances government operations as taxing people's income. If the government didn't tax people's income, right, they wouldn't have any money. I can tell you that right now. What are taxes for littering classified as? It's not really a tax because it's not mandatory. Well, it's a fine, but like not everyone has to pay it. I would more so like count that as a fine. If you litter, it's a fine, right? Just like if you speed, it's a fine. It's not really a tax. All right, payroll taxes. So all you guys that are working out there or that are about to work, when you get your paycheck, and generally it's virtual nowadays, right? If you go all the way to the bottom, you can see, what's taken out of your paycheck, and that's called payroll taxes. That's a payroll tax, right? So generally, most of the time, those taxes, those items are going to be proportional. They're going to be proportional, like 2%, 1%, things like that. That's usually like Medicare, Social Security, things like that. You're paying in. Everyone's paying the same rate in relation to their income. It's proportional, and then we're all going to benefit from that later on, right? We'll collect Social Security and things like that. Medicare for the gray hairs, right? Healthcare for those that are older. So who's going to pay it, right? Who pays payroll taxes? Again, workers, right? You're not going to pay a payroll tax if you don't work. Who gets it? Where's that money going to go? Again, federal and state governments. Most of the time I'd say federal governments for payroll taxes, but both, right? I think there's some Michigan payroll taxes that you're going to pay. And then some examples like I already mentioned: Social Security, Medicare, things like that are going to be taxed 1% to 2% from your paycheck, and you're just going to collect that when you qualify later on in life. All right, property taxes is when you pay taxes on your value of your home, the property that you own, right? So anyone that owns a home is going to pay property tax. Now, property taxes are regressive. Again, kind of just like, sales taxes are regressive. If two individuals own a $100,000 home, right, and they're paying property tax for residing in that city, right, they're both going to pay the same amount of dollars. Right? If both individuals own a $100,000 home, and maybe the tax rate's 5%, they're both going to pay $5,000 in property taxes. Again, then when you take that $5,000 in relation to a lower income person versus a higher income person, right, it's going to be regressive. That's going to hurt a lower income person much more than someone that makes more money if they have the same home, right, in the same city. So who pays it? Anyone that owns a home, right? So if you live in an apartment, you're not going to pay property taxes. Remember that when you get to the town hall meeting. If tomorrow I give you a person that you live in an apartment, right, you're going to be in support of a property tax because you don't have to pay it, and you're gonna have the benefits of whatever public goods are going to be brought to the table, right? So you're going to be in support of property tax if you live in an apartment, for sure, without a doubt. So who gets it, right? Kind of depends. Generally, that's going to be state and local governments. Federal government's not going to collect property taxes. And property taxes, again, generally helps fund schools. It generally helps fund schools. Major source of income for state and local governments. Generally schools, okay? Sales tax, we know what a sales tax is, right? You guys all pay it, besides food and things like that. But generally when you buy a good in Michigan, you pay 6% on the sale of that good, right? So you buy $100 worth of clothes, you're going to pay $6 in taxes. Again, it's going to be regressive when you compare it to different income groups. Who pays it? Anyone that buys anything, right? A consumer. Who gets it? Again, generally going to be state and local governments, right? Because they are the ones who set that tax rate. They're the ones who are taxing it. So when you pay a 6%, sales tax in the state of Michigan, Michigan's going to get that, and Michigan's going to decide what to do with that money, right? And really, you decide what they're going to do with that money by the people that you vote in. Remember that, okay? And then, same as the last one, you can just write an arrow saying major source of income for state and local governments. Okay, we also tax businesses. We tax corporations predominantly because corporations are a little bit bigger than small businesses and they can afford to pay it a little bit more. And generally, those taxes are going to be progressive, right? So the bigger the corporation, they're going to pay more in taxes. And I say that, but people, right? Amazon paid $0 in taxes. $0. A lot of big businesses paid close to $0 in taxes, right? Through loopholes and other things that kind of happen. But generally, the system is progressive, but there's ways around it, unfortunately. But so who pays it? Corporations will obviously pay it. Who's going to get that? Depends on you know who's issuing the tax, federal, state, or local governments. And then extra info. Corporate income taxes have been decreasing ever since the 1960s. I think that's pertinent info that you need to know. Is we've been, just like we've been decreasing marginal tax rates on income, we've been decreasing corporate income taxes ever since the 60s, and even more so after Ronald Reagan. Okay, excise taxes is again you know, tax on harmful things, right? Like gas, right? Climate change and cigarettes and things like that. Those are going to be regressive. Who's going to pay it? Consumers, right? It's going to be much like sales tax. Who gets it? You know, federal, state, and local governments, depending upon, you know, what the tax is. And then extra info, it's usually used to address externalities, right? We want less cigarettes. We want people using gas less and other things, right? You know, alcohol's tax, things like that. We want people to consume less of those things. So that's the idea of an externality. All right. Luxury tax is tax on a luxury item, right? Like if you own a helicopter, you're going to pay a tax on that. If you have like, I don't know, something like crazy that like no one really has, that's the idea of a luxury tax, right? So generally those are going to be progressive. Who's going to pay it? Consumers of whoever buys the helicopter. Who gets it? Whatever, you know, part of government is level of government that is issuing the tax. And then usually luxury taxes unfortunately don't really work. Because luxury items in nature are elastic, and what elastic means that when price changes, consumers are going to be really responsive to that change. In other words, the law of demand is really going to take an impact, right? So when price goes up, people are going to really not buy it. So generally, if you know, luxury taxes don't work a whole lot, right? If you're in the market for buying a helicopter and you find out that you have to pay 40% in taxes on it, you're probably not going to buy the helicopter. And let me move myself over here. All right. Oh no, gotta do it all again. Good idea, Michael. All right, so luxury taxes, boom, there it is. And usually it's just ineffective, right? That'd be kind of extra info on it. User fees and tolls, right? Like toll roads, or anyone ever cross Mackinac Bridge, right? You got to pay $4 or $5 to do it, right? That's the idea of like a fee or like a toll that's going to be regressive. Who's going to pay it? Whoever uses that. Not everyone's going to pay it, right? Whoever's using that, whoever's consuming that, good or service, right? Generally, like whoever's using that road or crossing that bridge, etc. Who gets it? Again, whatever level of government's issuing it. And then extra info. Again, generally it's like a road, a bridge, a fee, right? Maybe you go into like a metro park, national park, state park, right? That's the idea of a user fee and toll. And last but not least is an estate tax. So that is if you unfortunately pass away, right? You die, and everything that you own, right, is going to be taxed. And generally that's a progressive tax. So federal and state governments usually issue that tax, and it generally is called the death tax, right? So if I unfortunately passed away tomorrow, and I was like not married, right? Then all these assets would obviously be would be taxed. Okay. All right, people. That is pretty much what I have for you guys today. All right, so you can take a short little break if you need to, but I need to see you guys at least by, I would say, like 9:46. When death is too expensive, right? I'll see you guys at like 9:46 at the latest, hopefully, and then because I want to go over the last part of that note guide, right? And I kind of want to talk about the town hall meeting thing we're gonna do the next couple days here. So I will see you guys all very